But let's move on and get some more perspective, putting the spotlight on the rate cut cycle and banks in general. Bernstein, in a recent note, said that they do not see India going through a sharp rate cut cycle, and they are expecting 50 basis points rate cut in the current cycle, with the real rate settling in at 1 to 1.5%. We have Pranav Gundlapalle, senior analyst at Bernstein, with us. Pranav, great to have you on. Thanks so much for joining in. What you're saying is interesting, because I think a large section of the street was banking on the fact that we'll get into a rate cut cycle and maybe, gradually things start normalizing, and perhaps the whole deposit mobilization issue also starts resolving itself once we get in the lower regime. But you're not expecting anything beyond just 50 basis points in the entire cycle?
Good morning. I think for us, we see about 50 basis points in this first leg of rate cuts. Unless we have a dramatic reduction in food inflation, falling off a cliff or something, or if there is a serious global recession kind of an environment, which will warrant massive cuts across multiple markets. So the rationale here is that the focus for the central bank has remained on inflation, which is also why we've seen tighter liquidity conditions, and therefore the whole discussion on deposit growth being weak, etc. So that would have to be resolved first. We'll first see a liquidity improvement before we see any sort of rate cut action from the central bank.
Okay, and what would the implications be, Pranav, if indeed this rate cut is going to be as shallow as just 50 basis points? What does it mean in terms of, asset liability issues across lenders, banks and non-banks?
I think two things. From a banks versus NBFC perspective, I think this means that the benefit for the NBFCs is going to be limited versus the banks, because they typically tend to benefit during a rate cut cycle, but that even it's a shallow one, the benefit would be limited. From the bank's perspective, I think what it means is that the whole margin compression that we talk about from a potential rate cut would again be limited. Now we're talking about potentially 10 to 15 basis points of net interest margin reduction from a 50 basis points of rate cut, which again would leave most banks with a NIM that is much higher than what they've seen, pre-2022. So doesn't result in a massive decline in their ROAs, which would be a bit of a relief, given that the current overhang on the banking sector seems to be the potential NIM reduction, as well as some of the other concerns around credit growth and asset quality.
So you don't see that much of a NIM compression for banks, right? That's the point.
Yeah.
Okay.
And within the banking space, what is your preference, Pranav? Going by all that you've said, I believe IndusInd Bank and HDFC Bank, you're leaning more towards them. Tell us the preference, and particularly when HDFC Bank comes in.
So I think two things here. In terms of preference, for us, HDFC and IndusInd at the top, followed by Axis, ICICI, and SBI, and then Kotak. Now, our view is, yes, rate cuts could be around the corner, but I think the focus will be more on the deposit accretion for the banks and the asset quality trends for the overall lending space. To us, those would be the bigger factors which drive the stock selection or the performance compared to the impact of rate cut. Now, for HDFC Bank, what makes it interesting for us is that there is still idiosyncratic profitability improvement story that will play out. Whereas for most other banks, the profitability is likely to decline from their current levels, which is peakish. So that's what makes HDFC top of our pecking order. For IndusInd, the rate cuts benefit them a lot more than peers. And that's kind of why it comes up second after HDFC. For rest of them, I think while the compounding story is largely going to play out without any big risk, the chances of a big multiple re-rating looks limited, given that their ROAs are likely to decline from here, even if marginally, and that will limit any sort of a multiple re-rating.
Okay. All right, Pranav, we'll leave it on that note for this morning. Thank you very much for joining in and offering us that quick perspective on just the way the rate cut cycle could perhaps play out here in India.